Forget about complicated politics for a second. Let's talk about your money. We're talking about your savings, what you pay for gas, your grocery bills, because right now, a very fragile 2-week pause in a global hotspot is quietly holding your entire financial future in its hands.
I mean, just let that sink in. The jets were probably fueled up, the orders were on the verge of being given, the entire world was just bracing for impact, and then nothing. A sudden, screeching halt to what felt completely inevitable. And that single moment is what we're going to unpack right now.
Before this sudden pause, the tension was so thick you could almost feel it in the air. World leaders were making these grim statements, news channels were on 24/7, and pretty much everyone was watching, just waiting for the first move in this terrifying global chess match.
And you know who absolutely hates uncertainty more than anyone else? The financial markets. Yeah. Even before a single shot was fired, just the threat of a conflict was enough to send these massive shockwaves through the global economy. Money was already on the move, and believe me, it was moving fast.
So what does that look like in real terms? Well, this is it. It's what's called a flight to safety, and it's a classic sign of panic. You see investors just dumping what they see as risky. Global stocks took a 15% nosedive. And where did all that money go? It ran for cover. It fled to the perceived safety of gold, which shot up 8%. It was a mad dash to find something, anything, that felt safe. And look, this wasn't just media hype or speculation. The signs were everywhere. They were undeniable. We're talking about military hardware literally being moved into position. The usual back and forth between diplomats, it had gone completely, eerily silent. This was real. The world was genuinely getting ready for the worst-case scenario. And then, just like that, out of absolutely nowhere, everything changed. Just when it felt like things were unstoppable, the message came down. A temporary ceasefire. A last-minute reprieve when nobody thought one was possible. So what even is this thing? Here's the most important part to understand. This is not a peace treaty. Not even close. Think of it more like someone hitting the pause button. It's a 2-week delay. All the underlying problems, all the military forces, they're all still right where they were. Nothing's been solved, it's just been kicked down the road a little. And for that one brief moment, you could almost hear a global sigh of relief. The markets steadied themselves, the headlines got a little less terrifying, but hiding just under the surface was this nagging thought. A timer had just been started. Okay, so why should you care? Why does a temporary truce thousands of miles away have anything, and I mean anything, to do with your wallet? Well, it's because this whole conflict is happening directly on top of the world's most critical economic artery. So let me introduce you to the main character in this whole financial drama, the Strait of Hormuz. It's this tiny, narrow strip of water, but it's one of the most important places on the entire planet. Why? One word. Oil. The scale here is it's mind-boggling. That number, 20%, that means 1 out of every 5 barrels of oil used by the entire world has to squeeze through this one tiny little passage. It's not just a shipping lane, it is the jugular vein of the global economy. Which brings us right to the heart of it, the most important question for you and me. If this thing flares up again, and that choke point gets closed, or even just threatened, what exactly does that do to your bank account? All right, let's follow the dominoes, because the connection between this far-off event and your day-to-day life is frighteningly direct. We're going to trace the path from that narrow strait all the way to the price tag on your groceries. Here's how it goes down. The conflict kicks off. Suddenly, that 20% of the world's oil is at risk. Global supply gets squeezed, and boom, crude oil prices go through the roof, almost instantly. For you, that means immediate pain at the gas pump. But it doesn't stop there. Higher fuel costs make it more expensive to transport everything. So the price of your food, your clothes, all of it starts to go up. Your entire cost of living gets inflated. So, right now, we are standing at a fork in the road. And there are two very, very different financial futures ahead of us. In one world, the ceasefire holds. Markets chill out, oil prices maybe even dip a little, and we all get some temporary relief. But in the other world, the ceasefire fails. Stocks could crash hard, oil could skyrocket, and we could be staring down a massive global inflation crisis. Those are the stakes. And this, right here, is why that initial sigh of relief didn't last long.
Because when you really look at it, you realize this isn't a solution. It's just an intermission in the middle of a really tense movie. And the entire global economy is just waiting to see what happens when the clock hits zero. You see, this 2-week window isn't a period of calm. It's a pressure cooker. With every single day that passes, we get closer to that final deadline, a point where a decision has to be made. You can practically feel the anxiety building in the markets as everyone watches that clock tick, tick, tick down.
So, if you take one thing away from this, let it be this. The fundamental problem, the thing that freaked everyone out in the first place, has not gone away. It's just been put in a timeout. The risk is absolutely still there, just bubbling away under this fragile temporary calm. And that leaves all of us with a final, pretty unsettling thought as we watch these next few days unfold. This quiet period we're in, it really isn't a ceasefire. It's a countdown.